Hello traders, Gary Wagner here just after 10:30 in Honolulu, after 3:30 in New York on Wednesday, December 23rd, 2015, and we are looking at the Dow Jones Industrial Average after 3 days of consecutive upticks. Whether you want to call this a Christmas rally, a Santa Claus rally or not, we have absolutely come off of the lows, with the Dow trading up about 157 points on the day at 17,575, just off of the highs of 604. Look at a daily chart. Let's pull that up first, and we can absolutely see the kinds of moves that we have witnessed in the Dow Jones Industrial Average over the last 3 days, each day providing that triple-digit move over 100 points. I believe even on Monday, this of course being Monday, Tuesday, and Wednesday, and that following just a dramatic sell-off, a fall from grace down 300 points, down 300 points plus, and that occurred of course on Thursday and Friday of last week. Because of the decrease in volume and the possibility of an increase in volatility, which we really haven't seen that much of, to be quite honest with you, I have kind of stood back from this. Looking at it right now, I wish that we had participated in this most recent rally, but we've gotten really some really profitable trades throughout the year in the S&P. We're going to end right now with our S&P trades definitively in really strong profits. So I'm absolutely pleased with that. And we'll take a look at this market. Of course, tomorrow is a shortened trading day. We will take a look to see how this market reacts next week, which is a shortened trading week, but we will have 4 days, to go ahead and to initiate a trade to position ourselves before the end of the year if we feel that that is our best action. I'm not convinced of that right now, because you tend to either have a lot of buying or a lot of liquidating that goes on right at the end of the year as hedge funds and institutional investors square their books for the year end. In other markets, of course, we'll take a look at the Standard & Poor's. And the Standard & Poor's, I'm getting some very, very interesting information out of that. And the information that we're deriving, first of all, it is trading up about 16.5 points at 2052. It is 5 points off of the high, but it is also 22 points off of the low being in negative territory, as you can see, currently up about 17. What is most important is looking at those longer term moving averages. But first, I want to take a look at the activity that we have seen over these last couple of weeks, and do that in terms of a standard candlestick chart, daily candlestick chart, as well as the current trend that we have seen. And believe it or not, this trend has absolutely been to the downside over these last couple of weeks through December, and it has been also absolutely trading within this channel. You can see it going from high to low. Here it absolutely breaks below that point, goes back into the channel here. And so now we've broken above this point again. So the question that we need to ask ourselves in terms of technical studies and this channel line is, now that we have breached this, of course, there's two basic possibilities. If you get a real breakout, you'll start trading above this line, and this particular bear channel, this upper bear channel right here, becomes your support area, and then you'll get a new channel and it will then begin to track higher. The other thing, of course, is for it, like we saw in this particular occasion here, where it went below the channel lines, to go back into alignment. And if that's the case, we could look to see it kind of drift lower like that. So in terms of the longer term view in the marketplace, we can see that it is tracked within a channel, and that channel has a bearish tendency. And the bottom line in this market is that ever since it has hit these record highs, it has not had the ability to take them out, and it has had many attempts that you can see through October. And if we look back, there was another occasion before the August meltdown, of course, in which we were tracking back at those specific areas. Now, as you know, one of the primary technical studies that we have been utilizing when looking at the Standard & Poor's has been a combination of the 200-day and 50-day moving average along with fib retracement to see if we can find anything that falls in alignment. That has only occurred in a perfect sense, and when I say perfect, well, almost perfect, was this area where we had these lows that came in. They came in below the 50 moving average, came in just below the 38% retracement. So as they came up, it was a solid, clear signal for us when we did go long right in this area. We also took a stab here and made some profits. We took a stab here and we had a drawdown on that trade, but we kept that drawdown pretty tight. Now, I draw your attention to the fact that this dotted red line, and of course this dotted red line is the short-term 50-day moving average. The solid blue is our 200-day, but that has just crossed, you can see that ever so slightly, that it has just crossed above the 200-day moving average, and it appears as though we're going to close on the highs today right at this particular area. Now, because of that, if we have this marketplace trade and break above this and stay above it on a closing basis, that to me is a clear indication that we could be taking a stab for these highs. We know we would put a stop underneath this particular price point, the 50-day or 200-day moving average, and we would have an opportunity to see this market genuinely go back into somewhat of a bull cycle, because realize that the predominant factor in a bull market on a technical basis is the fact that it consistently trades above a 200-day moving average. So if we can see that happen again, I believe we've got a pretty clear-cut path to take. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow. We might not talk to you tomorrow as it's Christmas Eve. If the markets constitute any kind of a report, if there's any kind of action, we'll come on. Otherwise, we'll probably just have a short abbreviated report tomorrow. Bye-bye.